Do, 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 do. Do, 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 do. All right, there we go. What's up, guys? Happy Friday. 'Twas the final trading day of August. Little good old-fashioned end of month action. So sectors here, you got a pop in the silver. Gold's pretty good. It's been a pretty good week to day trade the gold futures. And then we have a pop in the XLP, a little pop here in energy. Financials are up a wee bit. Then the Bitcoin is down about 3.5. You have the SMH down about 3, and big tech down about, we'll call it 1 and change. But in terms of our open trades here, I still like all three of them. Let's go take a peek at Google here first. We'll go in order from best behaved to least behaved. But all right, so for the Google calls, my sizing is kind of helping me and hurting me today. Where for the Amazon and the Tesla trades, I've got half my typical size, and then for Google, I have like a quarter of my typical size. Helps me out for the Amazon and the Tesla in terms of Google. Wish I maybe had a little bit more. But yeah, so for our trade here, get the monthly chart. But for the 250 calls out in December, again, I like the pop, I like the breakout. It's really more of, up here around 240-ish. We have a conversation about taking profit. And then if they want to pull the thing back into 200, 190, 180, I do think you're shot to jump in and buy more. We keep talking about the ideal entry. I think that was about, only about 25% ago. But I'm liking the Google, and yeah, if we were to get a decent flush, unless the signals change, I think one to jump into and scoop up a little bit more. From that, we can jump to the Amazon trade. Again, the good thing for now is we have time, and at least for me, I'm doing them with really small size. The irony being they're the kinds of setups, say my average trade is about 2.5%. For a few of these monthly charts, these weekly squeezes, 2-day squeezes, I'd like to get closer to maybe 5 or 10%. Right now, I'm closer to like 1 and change. But for the Amazon, let's go take a peek here at that 2-day squeeze. Good way to look at it on a day like today. If you were in cash and you ran your scans looking for a new trade, based on the current setup, would you want to jump in and buy it? Granted, I don't think I would jump in and buy more Google all the way up here. But I like the Google, and I still got to like the Amazon. Frankly, the month of August, not the easiest month for, jump in, find a weekly squeeze, find a daily squeeze, buy a call, and catch a breakout. And I think a bigger part of that, or all of that, might just be the Qs. So one little observation here from the Q tip. As we get a brand spanking new 2-day squeeze, but from a momentum point of view, all right, looking down here at the MACD bars, modified MACD, we go into August with momentum below 0. So in terms of your big three, your trend structure momentum, this has kind of been the picture all month. Good looking trend behind it, good structure, 21 above your 50, 50 above the 200, EMAs are stacked positively. That can make for a breakout when you get good, call it supportive momentum. We didn't get that the entire month of August, which can make for more of, they flush it, they walk it back up, they flush it, they pop it, they dip. Therefore, for the month of September, if we do get that positive shift, the breakouts, the weekly squeezes, daily squeezes can maybe get a little easier. Food for thought there. But yeah, that being said, for Amazon, I still like it. I do want to jump in and buy a little bit more, but that might be on the 3-day trigger. If we had the out-the-money calls that expire next week, I don't love the dip here today as much. With the October debit spread, 230-ish down to about 225. Would like a little bit more. I think we're kind of at a point though where the trigger to buy more Amazon, the trigger to buy some Google, some Tesla, that might begin with a QQQ trigger. Imagine we get another 1, 2, 3, 4 weeks. I sure hope we don't. But imagine we get another 2, 3, 4 weeks. Right, they can't break the 50. They can't take out the high. It's more of the back and forth. We'll still have good-looking SMH monthly squeezes, 2-day squeezes. I don't think they go and break out as easy. Therefore, before I jump in, buy more Amazon, buy more, really jump in and buy more of anything, could we get something like a 30-minute, 1-hour buy on the QQQ? Little heads up from the ground up. They maybe want to get the pop going. But I'm like in Amazon still, maybe thinking about buying more next week. And then Tesla. Still have to like the Tesla trade. All right, major focus here being the weekly, the 3-day, and the 2-day squeeze. And I think a good rule of thumb, if the pullback to the 21 EMA makes you a little uncomfortable, that's usually a position sizing thing. All the pretty things I like about Tesla around 340, 350, which are what? The squeeze, the structure, the trend, momentum, the score, the green arrow. The things I like about it up there around 340, 350, it's going to have pretty much all of that down to about 325, 320. So that means I'm jumping in around 340, 350, taking the trade. I've got to factor in, all right, they maybe pay me immediately. Always feels good, of course. Before the breakout, they maybe got to pull it back one more time. Get through a few more days, get through maybe another week. They keep on printing the squeeze, good scores, good structure. I think your dip's a chance to jump in and get more of it, which I'm very tempted to do, to be Franklin with you. But I'm going to try to hold off for a QQQ trigger. Then go and pick up some more Tesla. But yeah, as far as I'm concerned, no change here on the open trades. But I do think before you jump in, you grab a little more of that. You look at some of the NVIDIA, Broadcom. It may be anchored to 15-minute, 30-minute QQQ. Try to wait for the buy trigger there first. Alrighty, and now jump into the board. So a few changes here so far today. One being most important, we've gone from bullish to neutral. In terms of your combination of the indices, the Big Ten, and the sectors. And we can look at it, things still lean bullish. And when I think of it, I don't think we've had a negative total score maybe since back in maybe mid-March. It's been a while. But yeah, a little bit of a cool off. The indices go to only 46%. Big 10 basket dropping to only 16. The sectors dropping to 34. And then the index picture here. Dow Jones pretty strong. You got the RSP. You have the Russell. Then the S&Ps, and then a very neutral QQQ. Again, not the kind of score where I think, all right, I got to jump in and buy every QQQ put hold over the weekend. That's more reserved for maybe a target, negative 87. But at the same time, our best trades in these big tech, big semis usually come from the Qs have a score like silver. 95% of max strength, 92, 90. Not a measly little 2%. So Qs are pretty neutral, and then throughout that Big 10 basket, you got to like Google. We've got the Google covered, and then Apple not too bad, Amazon not too bad, and then pretty big drop off. Again, not the crazy bearish scores. Nothing really screams the end of the world just yet. But TSM is a little bit negative. You have a little negativity in Meta. Netflix negative 19, Nvidia negative 12, and Tesla is neutral. So good for Google. And then if you jump to the main list here, the full shebang, let's go to the all tab. All right, let's say maybe show us names with, we'll go 80% or better. And for 80% or better, you have 23 names. A little healthcare and decent chunk of financials. MetLife, BK, JP Morgan. So yeah, we can go through a few of the banks, and then let's go look at maybe sector strength. And yeah, today would be the banks and silver, the sexy stuff. But all right, for a few of the highly ranked names on the board, go look at a few of the banks here first. They do look pretty sharp. Now to jump in and buy JP Morgan, buy some Goldman. I don't think the worst idea. Wait for a buy trigger on the S&Ps first. You can maybe do that through the Dow. All right, Monday morning, Dow Jones prints a fresh 15-minute, 30-minute hourly buy. You maybe jump in, look for a bank. I'm a bit more of a fan of anchoring to the S&Ps. The thinking being early next week, they can't even get a 15-minute, 5-minute buy. Things might be a bit choppy. But all right, the XLF, the mothership. Yeah, I think out into September, you have to like the 2-day squeeze. She checks the boxes, and then what about the hourly? If you like it into next week, it's a nice hourly squeeze. All right, Goldman, JP, and maybe Morgan. Hourly on Goldman, not quite as impressive. Okay, so here's one a lot like Tesla. 2-day squeeze setting up, compression, nice trend behind it, the structure, the Momo. The prettiest of the colors. Anything you might like about it up here around the 745. The structure, the picture, the signals won't change down to about 715. So you should factor in, all right, if I jump in and grab it today, in terms of the time to the expiration, the structure of the trade, are we buying calls, doing debit spreads, doing a put spread? Am I comfortable next week if this kicks back into 725, 715? Again, in most cases, if you're not, it's more of a size thing. But I do like the Goldman. That said, where do I jump in and buy more aggressively? Closer to that 21. Try to catch them on the green arrow, not the white arrow. All right, let's go jump over to JP. Yeah, okay, we'll take a look at Baba. All right, JP with a daily, an hourly, and a 2-day squeeze. If I get long at 302, do I cry next week if it pulls back into 295? I shouldn't. It won't change the structure, won't change the trigger. Any call I would like to jump in and buy today, they're going to go for a discount around 295, 297. And yeah, it maybe pulls back into 295 and then 290, 280, 250. There's a point where a pullback's too big of a pullback. But again, try to catch these on the green arrow. I've been a broken record all week. I'll keep being it. The Google trade's a perfect example. Right, so we're getting long around, 205. We're buying that on the white arrow. That gives us, we'll call it, maybe 15% upside towards our target. At the same time, they could pull it back a good 20%. It remains a really nice squeeze. The guy or the gal buying it back here on the green arrow, they're maybe getting it from, buck 80. Well, they've already caught about 20% push in their favor. They can maybe go on to catch another another 15 and change. And hey, if you're long from about a buck 80, you're wrong under like a buck 60. You take on the 12% risk in exchange for the 35% reward. Green arrow way better than a white arrow. And not from a quality of the actual squeeze point of view, more of the entry. All right, so there's JP in the banks, and yeah, based on that that thought process, I do like him. I could take a nibble up here, or I could take a bigger chunk back here, and that might mean I miss the entire move, which will also happen. But all right, couple of the banks, and then let's go top 20. All right, Google, Silver, ABBV. Yeah, so how's healthcare doing? Yeah, that's the best healthcare's looked in pretty long time. All right, couple healthcare names off of the top 20. Some AXP, some O'Reilly, some Chevron, GD, Gold, the Dow. My main thought right now, keep what I have. Keep the Google, keep the Tesla, keep the Amazon, and then mainly based on the index action next week. Then figure out, okay, the S&Ps have a 30-minute, 1-hour buy trigger. Then I can go figure out, all right, who's the strongest index, who's the strongest sector, where's my top 20, where can I go find a brand new trade? Don't really want to front run the trigger off the index. But yeah, there's your theme. A lot of banks, a little healthcare, and Google. Google and the gold. And now for the bears in the room, your weaker names would be Keurig, Target, Marvell, Old Dominion, AMAT, ON, the Costco, the Starbucks, and the Johnny Deere. Got some MicroStrategy, Mondelez, Hims, Lulu, and Microchip. I've seen a few of the shorts really starting to work out pretty nice. One being, I think it was Starbucks. Pretty sure it was Starbucks. But this was the weakest name about a week ago. About a week ago. Yeah, textbook daily squeeze short. For a short, you catch it on the red arrow versus the green arrow. But all right, guys, I'm going to turn things over to you here. We have the Google, we have the Tesla, we have the Amazon, and let me think. Google expires in December. Got a little time on that one, and then both Amazon and Tesla expire on my birthday, the 17th of October. So all I'm asking for, I don't ask for too much, but all I'm asking for is Tesla into 400 for October and Amazon into, I'll be modest on Amazon. Amazon into 250. It's a modest little 10% higher. But yeah, I'm going to keep that. And then, like I said, next Tuesday, not next Monday, going to make the initial focus more of an index thing. All right, show up for work on Tuesday. Got the S&Ps above the 21 EMA, 15-minute buy, 30-minute buy. Can maybe go do some buying. More importantly for the big tech, big chips. Show up on Tuesday, Qs hold 570. 15-minute buy trigger showing up, 30-minute buy trigger. Perhaps we do some buying. And then quick peek here at the SMH. Yeah, I like it all. Could change next week, but that's part of the fun, right? So now you got the SMH in a daily, a 2-day, and a monthly. The triple squeeze. That's where I think your first couple of weeks of September are, dare I say, a bit more bearish. To me, a chart like that offers a great buying opportunity. Where to actually cancel the buy arrow, they would have to pull it back about like 30%. Could happen. I think a little bit more likely you get any flush. It's a buying opportunity in a really bullish monthly squeeze. Could make for a good Q4. Few things can make for a good Q4. The SMH monthly, the XLK monthly. She's a pretty one. You have the AMD monthly. Who else we have? We have, of course, Google. Amazon on the 3-day and the 2-day squeeze. Tesla on the weekly 3-day and the 2-day. The squeezes are plentiful. But all right, whatever y'all got, get it in the chat for me. I'll get caught up, and then yeah, don't think I'm going to take any additional trades here. As I say that, Microsoft catches me eye. 4-hour, hourly, 30-minute, 15-minute, and a 5-minute on the Microsoft. The softest of the micros. No 30-minute trigger. Damn. Just when I think I'm out, they try pulling me back in. Nice 15-minute here for Microsoft. Can they crank out the dynamic duo with a 5-minute? Indeed, they do. Now, in terms of rankings, there's a little context here. 33% for Microsoft is better compared to the last, 4 or 5+ days. It ain't knocking your socks off like a Google or an Apple, but context-wise, it's a little bit better. So I do like it. But if we go jump to the QQQ 15-minute, here's a bit of an alignment divergence. 15-minute Microsoft really bullish. My favorite trade. And then 15-minute for the Q-tip, it's a -8. Structure is neutral. The trend is neutral. Momentum is bearish. Where if the QQQ 15-minute looked like it did back there, to me feels a little bit more supportive. Yeah, go and buy some Microsoft. We got you back. Think of the action you had for pretty much all of yesterday's session. Good Google, good Tesla, all the above. Big chunk of that being a good QQQ. That was pretty much the only good QQQ we had all week. All right, so here's Monday. All right, you open up on Monday. Here's your 1-hour chart. Your neutral, big squeeze. Your squeeze is neutral. Your squeeze is neutral. You finally get the trigger. All right, gives you a pop, and that was all she wrote. Short-lived stuff, my friends. Okay, Google in the 213, Tesla at the 332, Amazon 228-ish. And then the cash Qs trade 570, and the cash S&Ps trade 64.58. Yeah, Casey holds up pretty good. Holds up pretty good. All right, what's up, Mike? Mike looking at the COP. Yeah, no, I don't think I'm reading a few comments here. I don't think today's. I don't think too much has really happened. Now I may be a little bit slow to crank out the old markets in turmoil special. The old golden rule of I'm not going to think about getting swing short above a rising 21 EMA. That has saved me money and headaches from May up until today. All right, here comes a flush. Oh my God, markets in turmoil. And they hold the mean, they rebuild, they squeeze, they push, they pull back again. Oh my God, markets in turmoil. I have to liquidate my 401k. All right, and they hold it. They don't break structure. They're back up. Yeah, it's just, you know, we'll see what's up next week. One of the better questions to ask yourself, though, if I'm buying it at current prices, am I cool buying more on a pullback to that 21 EMA? Makes a lot of things that much easier. So you're taking a nibble on Amazon, earlier in the week. It's like you have to have that conversation. All right, if I'm taking a chunk here at 231, nothing will really change down into 228, 227. But if I take half of my account and put it into the 240 call for next week's expiration, yeah, they could open up Amazon flat. It'll be really uncomfortable. A lot of things in trading are. This is maybe why trading is so tough, or one of the reasons. It's all self-inflicted pain. So I've had plenty of days in the past where it'd be a day exactly like today. Right? I'm long some Tesla, and Tesla does the unthinkable, and it pulls back to a daily and a 2-day 21 EMA. I'd be long some Amazon. Amazon would do the unimaginable. It would just dip, not even pull back to a 21 EMA. And those days would be uncomfortable, painful. You got the anxiety, you got the anger. F you, Amazon. You're Googling Bezos' address. It's You guys have heard John and Henry say it. You cut your size in half and double your stops. I think that's a lot more than tongue-in-cheek little saying. Can really be helpful. All right, everything moving around here. So yeah, for COP. All right, that'd be energy, right? Let's see. Let's go all, and then all right. It would rank out at, drum roll please, 67% of its best score. Good, but not crazy good. You could work with good. And then from there we have a weekly, a 3-day, and a 2-day squeeze. Let's go check those out. Your weekly squeeze, I don't like it for a long, -2. And then the 3-day squeeze, I don't love that either. It's a 5 out of 15. And then the 2-day time frame would offer you another 5 out of 15. Yeah, it wouldn't be my play for a big swing. That being said, there's a chance they still take the weekly 3-day squeeze, try to break it out. If I don't love the bigger time frame trades, I can scale down to maybe a 1 hour, 30-minute, 15-minute. And then for conversation's sake, let's just say the 2-day squeeze gets you into 104. If I don't have the buy trigger on that bigger time frame, I can play the 15-minute, 30-minute, 1 hour squeezes. A little bit more of the shuck and jive, but then play that path from 99 into the bigger target. Where if the 2-day chart looked more like Tesla, for example, I do want to buy that, hold it, and ideally buy more on the dip. which we will ideally do next week. Market willing. But all right, there's COP for you. And then Vinny, what's up, Vinny? RKLB, Rocket Lab. Yeah. Let me see. Rocket Lab. All right. 2-day, a daily, a 2-hour, an hourly, and a 30. The dirty 30. I don't have the green arrow yet, but it's a pretty bullish off the 3-day. The 2-day, rather. And then daily squeeze. All right. So here's my one little gripe. Unlike the push you had from that daily squeeze, you don't have that supportive momentum yet. In a lot of ways, minus the squeeze, it's kind of like the QQQ from August. Your chart structure is bullish, your trend is bullish, momentum not so much. And that can make for the pop, the flush, the pop back up, all the back and forth versus trend structure and momentum. A lot of times easier for a big directional move. Right? QQQ daily. No momentum, and they pop it, they flush, they pop, they flush. The chop of the chop. So from a timing point of view, that can make it, if anything, allow for more time. If they've got the thing fully called it locked and loaded, in the right market, you can jump in, get long, catch the immediate push. There's also a situation where it maybe takes another 5, 10 plus days. Get momentum, get that positive shift, get the trigger, then they try to go for it. If not playing it off the daily squeeze, then you have your 1 hour, your 30, and your 15. Nice 15. Nice 15. I kind of like that actually. 15-minute on Rocket Lab. Yeah, good call. I know Sam's been watching it. I like it as well. All right, Vinny with the Rocket Lab. Lori, affirm for a short. I do get where you're coming from in terms of you short the extended stock. For me, never been my trade really. Where my goal with this kind of thing, with the structure, momentum, the score, I want to be a buyer of that. Granted, I maybe don't want to jump in and buy all of it all the way up here. But if it's an A plus setup, good structure, good trend, for me to short that, I'm kind of cheating on my system. And that's just not respectable now. What I would say though, if you're trying to short these overbought names, what I think is really critical, call it, you got to get some sort of active sell trigger across a lower time frame. Think of what you're trying to fight here. Keep it really simple. If you get short a firm, you're fighting a really bullish daily squeeze. Compression, structure, momentum. Now to fight that, you have to have a little ammunition. That ammunition comes from a 5-minute, 15-minute, or a 30-minute sell signal. Right now, no 5-minute, you check the 15. 15-minute is neutral. 30-minute on a firm, leans pretty bullish. For those reasons, I found that can be a tougher short. Where if we compare that to, say, Starbucks from about a week ago, when we short something like Starbucks, we're not fighting anything. We short a firm, we're going very much counter structure, counter trend, counter momentum, counter the squeeze, kitchen counter, every counter. And then Starbucks is more of, all right, well, you have broken structure. The trend is shit. Excuse me, the trend is bearish. Everything's bearish. I'm getting short going with the rhythm of the current picture. Doing that 25, 50, 100 times in a row, easier than trying to, what to me feels a lot like trying to pick the top on a really strong name. Crowd. What am I buying today? I don't think I'm doing any more buying today. But for next week, market willing, I would like to buy more of the Google, Amazon, and the Tesla trades. I've got about half my average size in each. And like I mentioned, the kind of things I would like maybe, a little bit more than average. But we shall patiently scale in. Yeah, that too, Surfrider. That too. And then crowd. Looking at crowd. Yeah, I wouldn't buy crowd because it fits none of my criteria. Right, my criteria comes from the scoring system, and if I'm going to buy it, I need a positive 15. Those are my 15 things saying, all right, T, jump in. We're going to try to get you the paycheck. Right now, the score is a -4. So based on my system, I can't buy that. And then in terms of maybe Ovgo, the one we call the Ovgo, that one is a 7 out of 15. It's pretty good. I'm looking for another 8 or so points. So that's the key. That's a tough thing with trading is I think a big part of it is saying no to more. Say no to more things so you can trade the whole less trades more size mentality, which I'm still trying to pound into my head. So taking Broadcom, I could jump in and buy a little bit. I'll talk based on my account size, my risk tolerance. Based on the current score, I could comfortably jump in and buy like maybe $2,500 worth of the out the money calls. If the daily squeeze for Ovgo looked like the 2-day squeeze for Tesla, 15 points, not 7, perfect structure, not decent structure. I want to buy about $25,000 worth. Less trades, more size. I can diddle around with B minus, B plus. Big part of it, yeah. You have to have that rule set in terms of if I'm going to pull the trigger. Here are my very clear, proven, and written in stone rules. For me, I don't have too much of that today, so keeping the additional powder dry. KC, some short candidates? Yeah, so it'd be a lot of your Targets, your Starbuckses. So for the short side of town, we would go to top 20 and then the bad boys. So Target, Marvell, Keurig, ON, AMAT, Old Dominion, DE, Mondole, MicroStrategy, some of the Bib, and Lulu. And then context-wise, who are our weakest sectors? And let me go here. We don't have any that are really all that weak. Right, the ARC -21, utilities -20. So nothing really all that bearish. But if we go through a few of the stinkers, let's go maybe Target. Yeah, I want to buy more Tesla. All right, Target. Weekly, a 3-day, a 2-day, a 2-hour, a 15-minute, and a 5-minute. Okay, let's look at maybe the 2-day squeeze. Now for the short side, the same rules have to apply. I want to short a squeeze with a red arrow and a -15. So if -15 is going to be an A plus short, then a -6 would be like what, maybe a C minus? Not terrible, but not great. No trigger there just yet. And then for the 3-day squeeze and the weekly squeeze, that'd be the same thing. Would short them on the trigger. And then for Marvell, okay, 2-day and a 3-day. And then 2-day squeeze, no trigger yet. And 3-day squeeze, no trigger yet. And then 2-day squeeze. No green arrow yet either. Again, they look shortable, but I want to short them on the short trigger. Okay, what about maybe Keurig? Sugared caffeine. Weekly squeeze setting up on the Keurig. The Dr. Pep. Okay, so really good looking short. Big weekly squeeze, broken structure, bear trend, bear momentum, negative 15. It does make for an A plus short. Everything that makes it an A plus short today, it'll have all the way to about 33 and change. Notice we have the white arrow, not the red arrow. White arrow says all the criteria in a decent entry. The red arrow says all the criteria, great entry. Can I get short down here? Definitely. But with my sizing, time to expiration, the structure, I'm doing that in a fashion where if they got to pop it another maybe 10 or 12%, I can't be freaking out about that. Thinking should be, yeah, work it back into 30, work it back into 32 and change. If the signals are the same, now I'm getting an even better short. Same structure, same signal, way better risk reward. We jump in short that today. We have what? We can maybe catch a flush down to about 28 and change. That'd be my target. Okay, so I maybe catch the 4% additional flush. Or they got to pop the bad boy a good 12, 13, 15. If I have a guaranteed 95% win rate, sure, that can work. Mine's closer to 70. Even with 70, can I short that around 32? Maybe risk about 4% and then try to catch the 12% flush. Makes sense, my peeps. RV, lemonade. Lemonade, a 2 hour, an hourly, and a 30-minute. Yeah, it's a weird one where your lower time frames have bear squeezes, but you're getting that right above your rising 21 EMA off your daily. In the context of a really bullish chart, actually. Yeah, she a funky one. Daily chart with 14 points, great structure, the Momo, the trend. But from the ground up here, you're getting a little sloppy. Um, yeah, based on the bigger time frame, I'd be inclined to not want to short it. But at the same time, I would buy it on the inverse. Hold your 21, 15-minute buy, 5-minute buy, 30-minute buy. Then we jump in and buy it. All right, Tesla trades 333. What's up, Stevie? Oracle, and then D's got some Qualcomm. And then folks in my room, I'll take a peek over there in a minute. All right, Stevie, happy Friday. Oracle. Like, I should call that my edge counter. How much edge do I have for a really big directional trade? And not every trade has to be a big, massive directional trade. But I found that the criteria for that kind of trade, for a lunch money trade, income trade, day trade, I think JC called it chump change. It's the same thing, just a smaller time frame. So whether it be, all right, I'm jumping in for a scalp, I'm taking a big swing position, you got to check the edge counter. And right now, the quote unquote edge counter on the Oracle Daily, I've got a 0. I can't get short based on too much. I can't get long based on too much. I could throw a few $1,000 at it, or I wait for a better setup and throw more thousands at it. That might require patience, and that's where, for a lot of us, myself included, we get pulled into the C pluses and B pluses. Where imagine you could only look at your charts, 15 times per day. If that was my rule, I wouldn't even look at price action. I would look over here. Okay, who has the perfect weekly squeeze? Who's shaping up on the 15-minute? Who has a nice hourly squeeze? Jump in, take the trade, keep it moving. But if I can only look 10, 15 times per day, for example, right now TSM has a daily squeeze. So it's a 2 out of 15. Wouldn't really get any of my time or effort. The pickier you can be, uh, I've just found a huge, huge positive impact on your bottom line. If you can handle the patience aspect, the discipline, and again, a lot of saying no. Like, yeah, this is decent, but no, I can do better. And yeah, that one's pretty good, but no, I can do better. And if you're not there yet in terms of mindset, discipline, confidence, track your next 50 trades. Right? Track your trades. Take ideally the same trade every time. You get your proof of concept. You get your feedback, your data. That's where your confidence should come from. All right. So I did a little day trade in the gold futures yesterday. And the thinking there is not, hey, here's my pitch. I'm guaranteed to make money here. The thinking is, all right, I've done this enough. Where was she? 2 trades actually yesterday. And the thinking for both is the same. It's not, hey, here's my guarantee paycheck. Because I've got the green arrow, the entry, the structure, the squeeze. The thinking is, hey, I've taken this same trade, so many times. I kind of know what to expect. Got my win rate, got the track record, and you just find if I do that every single time, it'll all work out in my favor. All right, jump in, 15-minute, you play for it, 15-minute, catch a pop. But if we're taking random trades and we're making things up on the fly, we're jumping from that setup to that setup, that indicator to that indicator, tough to build up that confidence proof of concept. And that can flip the mindset from the anxiety, euphoria, the fear to all right, here's my pitch, here's my 2-day squeeze trigger in Tesla. And I'll do my job. I'll buy it where I should buy it. I will cut it where I should cut it. I'll book the profit where I should book the profit. And again, if I can do that 50, 100, a few thousand times in a row, we'll be in good shape. That kind of mindset on a day where Tesla's pulling back a good 4%, kind of pulls you mentally from that one current trade, and you see the bigger picture of the system you're working. My reality being, I'm right around that 70% ballpark. If I take 100 2-day squeezes just like that, pretty good chance about 30 of them won't work. Maybe Tesla's one of them, maybe not. But again, key there is just, am I taking that trade with as much edge as possible? If you have 5 things you look for and there's only 3 or 4, I don't think you take that trade. Or you take it and you cut it in half. All right, y'all, 5-minute countdown. So anything to do here on the spiders? Although I'm ready for a class tomorrow and then a 3-day weekend. All right, end of day 15-minute and 5-minute on the S&Ps. You maybe go for the 64.50 pin. But about 4 points off, that's only maybe so exciting. Yeah, I don't know, y'all. I'm thinking we keep our current stable. Keep the powder dry, and then we hit them hard next week. All right, I'm gonna go jump into a few more rooms here, and then if y'all guys have any questions on the indicators, the class, the dashboard, we can hang out for a few minutes here after the close as well. Looking forward to see how things finish up here. So, let me show you guys my new wallpaper. This is the squeeze skunk. I like it. That is the squeeze skunk. But yeah, looking forward to see who takes the top dog spots tonight. For now, it looks like your silver, your gold, your financials, all the above, and then for that Big Ten basket, it's a lot of the Google and a lot of the Apple doing the Lord's work. Yeah, Sonny, tomorrow will be 10 o'clock to 2 o'clock Central. Yeah, so if I'm looking for a 15-minute trade, I'm looking for, let's go back to the gold futures. I mean, guys, I'm really a one-trick pony. Like, it's not not a good shtick or a good webinar headline. If I take 1,000 trades this year, 995, they're going to be a squeeze. And 900 and maybe 90 of them, they're going to have the white or the green arrow. So for the same reason I would buy Google for a bigger picture swing trade off of something like a monthly squeeze. All right, here's Google. Here is the monthly. All of those same variables. That's the same reason I'm going to jump in and day trade the gold futures off the 15-minute time frame. $15-minute squeeze, green arrow, good entry, 15 points. Only difference is your 15-minute time frame. You're making money or losing money a lot quicker than a monthly, a weekly, or a daily, hourly squeeze. But the whole thinking the same song and dance, it's all the same. Right, we find the compression pattern. Everything's compressed, squeeze printing, all the energy being built up. We aim for the entry near the 21 EMA. We look for all the directional criteria, 15 points, green arrow, jump in, play for a push to the third ATR extension. Again, 15-minute, 30-minute hourly, quicker than a weekly, monthly, or a daily. But in plain English, I bought the gold futures in the 15-minute because of the green arrow. And then for the 2-day squeeze over there on Tesla, we're buying that for the green arrow. Right, bigger time frame, more time till expiration, but the same song and dance. Compression, trend, structure, the gasolina, and all of the prettiest colors. Again, that's how you get the track record. If I'm trading squeezes on Monday and I'm doing a breakout pattern on Tuesday and I'm doing a Fibonacci approach on Wednesday, I'm a cup and handle guy on Thursday. If it's always a different trade, I can track my trades. They don't tell me too much. Where if every single time I take a trade, I've got one arrow, and that one arrow means I have one set of variables. I can figure out, all right, does it work? Does it suck? Does it work good on big time frames, small time frames? Is it better for longs, better for shorts? Back when I was trying to be an NBA player, I'm still kind of trying. But back as a kid, I would shoot maybe like I'd be the kid out there in the snow, like hands breaking open from frostbite shooting free throws. I maybe shoot like 500 free throws per day. And 20 something years later, I can walk outside. If I got to shoot 100 free throws, I'm confident I'm going for like at least 75, 80%. But that confidence comes from what? taking that same trade hundreds, thousands of times in a row. If I've got to shoot from 15 feet back behind the backboard, and I haven't done that thousands of times in a row. Not too much confidence there. Yeah, Sam, good question. So for a 15-minute squeeze, I'm a fan of either 0 day till expiration, for a futures contract, no expiration, or maybe something like 2, 3, 4, maybe 5 days out. Good rule of thumb of the 15-minute squeeze. If you buy it on Monday, it should be moving for you by, call it, Tuesday. Smaller time frame, quicker move, all the above. But even then, if you buy it on Monday and think, all right, I'm going to catch my pop tomorrow for Tuesday, I don't hate the idea of giving it maybe a couple extra days of expiration. We bit more cushion for the chop. Hey, what's up, Andrew? Andrew, I will get back to you through email here after the close, my friend. I did see your message. But all right, y'all, another week in the books, another month in the books. Final QQQ print is 570.40. Yeah, so what was the month of August? It came and it went. Right? It saw and it conquered. For what it's worth, in terms of aggressive swing trading, I don't think you could get a worse month. No big sustainable flush. We'll be fair. You had a few nice days back here, but more so just a choppy back and forth pop it drop it month. That's very different from June into end of July. Squeeze, white arrow breakout, and the walking higher of the price. So that kind of action, you're buying the Tesla 2 day squeeze, you're buying the Google. Market's a little bit more supportive of take it and break it out. Month of August, definitely a little bit trickier for sure. And then final print here for the cash S&Ps is 64.60. And yeah, it leans bullish. Like, nothing's really changed. 13 points out of 15 in the box, and you're neutral from the ground up. Dow Jones final print 456-ish, looking pretty good there. The Russell final print of 235-ish. And then a few of these big dogs here. Google looking pretty good. Microsoft is, it's eh. Amazon, I like it into September, October off the 3 day and the 2 day squeeze. Maybe buying more next week. Meta is a quiet one for now at the 50. Netflix chopping TSM in a ever so slightly sketchy daily squeeze. Nvidia would love to be a buyer on a buy trigger. Tesla closes 330. Again, guys, if the market is decent next week and the 2 day squeeze for Tesla continues to look exactly like that, track record says I kind of have to buy more. Like that's my game to play. I don't get these every week, so I have to take 100 2 day squeezes like that in a row. Not too sure if that one works, but the boxes are being checked. AMD final print at $1.60 and change, and then the Broadcom down a good 3.5, final print of 297-ish. Okay, so all that being said, let's go look at our final print on the board. Okay, so things finish up here as neutral bullish, which again has saved my butt for a few months now, not getting swing short aggressively. If we go from bullish to neutral to bearish, then I'll look for a swing short. Market is neutral bullish. We have the Dow Jones at 90%. The Great Dow 30, you got the IWM, S&Ps, and more neutral QQQ. Sectors wise, silver, gold, real estate, communications, energy, materials, and the financials all looking pretty good. Bitcoin a little bit softer. Utilities, XLP kind of sloppy. The Big 10 basket, Google is a champ. Apple pretty sharp. Amazon not too shabby. And then, again, none of these scream end of world. Meta -27, TSM -26, Netflix -19. Nvidia negative 14, Broadcom positive 14, Tesla positive 14. So it's like an electric car. If you got 14% of your max charge, I don't think we're going too far. We don't have negative 86%. Not too sure what that would do, blow the car up. But we don't have 94, 90, 80, 70. So do I think Tesla's in trouble? No. Do I think it has the goods for massive immediate breakout next week? That's reserved for things more like Apple and Google. And then for the top 20, quick peek over here. Top 20 would be your banks. We'll do bullish first. Google, silver, ABBV, gold, the Dow, few different energy names, couple banks, and yeah, a lot of the same names from yesterday. But all right, y'all. Yeah, any questions here on the dashboard? The indicators of class, today's trades, open positions, my college football predictions. We can hang out for a bit and talk some shop. And then blah. I've done a lot of talking this week. Those of y'all who are taking the class tomorrow, you should be getting your beta access version of the sheet here, or the dashboard, in a few weeks. We'll get the exact date here for you sometime soon. But it is a coming. They're going to add the scores for the 3-day time frame and the 2-day time frame. They're going to add a few different things. The biggest one being they're going to bump up the beta days from what's currently 193 stocks into about 3,000. So, for example, one of you called out BABA earlier. So if you search for the BABA, right now BABA would be, try that again. Okay, so for example, we don't have BABA in the database. So if we bump it up to about 3,000 and change, we should. But if I wanted to look for maybe Apple, for example, there's Apple. When we bump it up to 3,000, if you look for a name and can't find it, just shoot me a message. We'll get it in the database. But yeah, they're working on that. They're working on the squeeze functionality. The goal there, basically take the watches columns here from Toss, which, as we know, can be a little finicky, like kind of slow loading data. The goal is take all that data and then put it on the live dashboard. We'll talk about it tomorrow, but the process I kind of envision is, wake up or before bed, you look at the overall market first. All right, are we bullish, bearish, or neutral? Okay, so everything is updated here for the close, and we're neutral. So that tells me for Monday morning, don't look to be overly bearish on being in a big rush to be bullish. If anything, keep on leaning a bit more bullish, but just be patient. Keep the cash nice and tight. Enjoy the coffee. Wait for a good pitch. I'm in that kind of market. And then index-wise, Dow Jones leads the charge, followed by the Russell, followed by the RSP, S&Ps, and the QQQ at -1. Now, for me, a lot of my best trades are usually going to be in Google's, Apple's, Amazon's, Nvidia's. That's really good context. So the Qs are neutral. By default, the idea of jumping in and buying a bunch of Nvidia next week gets a little bit tougher. And then sectors-wise, silver, gold, real estate, energy, all the above. Again, get the context of what kind of market am I in, who leads the market. Then from there, narrow it down to, all right, who has the, from our homepage here, who has a score of maybe, 80 or better. The cream of the crop. That took me down to 21 names. Then I could take it a step further and say, all right, only show me names in the best names in the best sectors. Today that would be gold and silver, and then you could throw in a few banks. But do all that work in all that context, build the edge from that point of view. Then the goal being, all right, across every time frame, where can I find the best squeeze? So yeah, this will be I think a pretty good one for us. It's like the iPhone. This is iPhone 1, or maybe a little bit like the Zune. We'll go from the Zune to the iPhone 14 in time. Yeah, the alpha version, exactly. Yeah. All right, let me get caught up here, get through a few questions. Zach, nope, no ads on Tesla today. I do want to buy more. The 2-day squeeze says I should buy more, but I'm gonna wait until early next week. Just try to get a couple triggers on the indices first. If I can get the QQQ and the S&Ps kind of winking at me from across the bar, that might be the cue. So can we change? Yeah, so we can go back in time as far back as we've been collecting data. So for example, if I want to look at maybe, all right, take me back in time to August 1st. Here was our picture back on August 1st. We had a neutral market. we, we begin neutral and we end neutral. But back on August 1st, you had a neutral RSP, Dow Jones, utilities were decent, followed by gold. The SMH is back here. Apple's gotten better. Microsoft's kind of dropped off. We can look. How far back can we go for now? Okay, maybe not that far back. But now that we have it, as we keep on moving forward, we'll keep on collecting all that data. All the data. But I'm going to put it back to today before I get confused. Jump in the next week based on June's analysis. The 29th. Yeah, Brandon, great question. So with a few divergences here on the Qs, why do I see it so bullish in the short term? I actually see it as more neutral in the short term. The context behind that being, yeah, the monthly chart, the weekly chart, the daily chart, they're all mainly bullish. But that current score of -3, -3 equals pump the brakes, Junior. Like don't buy it, don't short it, don't be in a big rush. There's very little edge for a big trade. I think I had maybe 4 or 5 trades on the gold futures this week. All profitable, all pretty easy. Right, and gold has 90% of its best possible score. So there's a lot of edge for a long. And then we talked about the Starbucks chart. Go back about a week ago, Starbucks had a -90, right? There's a lot of edge for a short. And not a short meaning, hey, I'm going to buy a put and it'll maybe break down a quarter from now. No, I'm going to short it today and can I be in a profit tomorrow? That's your -80s, -90s, +90s, +80s. The Qs have a -3. So again, I can look at the bigger picture and say, yeah, it is a daily chart bullish, bearish, or neutral. And it's not, in my face, have to jump in and buy it right now. But 11 points out of 15, trend is bullish, structure is bullish. It wouldn't be something I can short. But then short-term thinking, it has a -3 for a total score. Why is that? 5-minute neutral, 15-minute neutral, the hourly signals are neutral, 2-hour neutral, 4-hour neutral. So I would say bigger picture, I see a bullish. Amazon squeezes behind it, Tesla squeezes SMH, Nvidia, Broadcom. Short term, I see it as very stuck. It maybe wants to flush back down to the 50. It maybe wants to take off the top here. I really can't take a trade for either until we go from a -3 to something stronger or something weaker. Good question. Hope that makes sense. All right, keep on scrolling on through. Hey, what's up, Skydiver Jim? Hope you're well, man. That's a good question. One, I don't happen to know the answer to. I can talk to a few folks here, try to get a little clarity for you. But yeah, as soon as I do, I'll let all you guys know. But I'm not too sure on pricing or the exact launch date. But yeah, Jim, hope you're well, man. And Kurt, yeah, same thing there, Kurt. Certain things I'm a little bit out of the loop on. Do I look at lower time frames than the 5 minute? Not usually. I think with most indicators, the lower the time frame, the more room for noise, called it flimsiness. For a day trader, a scalp, I like a 1 hour, 30, 15, and really a 5. I'll do a 2 minute every now and then. I'll do a 1 minute. I tend to like him from the 5 up. Seems to be my short term sweet spot. Sam in Philly, how come Tesla has so much green with so much of a pullback? Again, really good question. So there's pullbacks that change. And I say this all with love and as someone who, again, on a day like today would be very uncomfortable in the past. There's pullbacks that change the actual chart at hand, momentum profile, the trend, the structure, the score. And then there's pullbacks that change nothing, but because we're human beings, they can get a little bit uncomfortable in the space between our ears. To answer your good question, how come nothing changed here on Tesla? The fact it's down about 3.5% today, from a trend, structure, momentum criteria point of view, nothing changed. The 15 things I had in my favor yesterday and the 15 things I had in my favor back here, it still has them. That tells me what? I don't have to do anything, right? Don't panic, don't cover the trade. It's just a dip into it remains a nice setup. Now, next week, Tesla's taking out 320. They break the 50. They get momentum cross. They go to a -10. Okay, then a lot of things have changed. At that point, I have to strongly think about taking the trade off and jumping ship. Your tool should do a few things for you. One, tell you when to do nothing, but at the same time, also tell you when nothing is changed. And I think a lot of times we equate, good or bad to the daily percentage change. Like, oh man, Tesla's down about 3.5% today. What a train wreck. If I were to wake up in cash and run my scans and find that kind of setup, most days I can't buy that fast enough. Whereby, by contrast, if we go look at maybe TSM, not a great example, but if TSM had a lot of green back here and no longer does, it's because something actually changed. So now, as far as hey, where can I jump in and buy more Tesla? That'll kind of be the entire queue for next week. If it can remain good looking 2 day squeeze, good structure, perfect score, with patience, I do want to keep on buying more. If the picture changes, we don't have the green arrow, we don't have the 15, we don't have the structure, then we have to jump in and make some active management decisions. Good question. Hope that makes sense. That would really get me in the past as well. Reason being, I would play things a little bit too big than I should. Like, cut your size in half and double your stops. But I would have so many times where I would buy Tesla a little bit too aggressively. It would do exactly what it did today, pull back. Not in a fashion that changes trend, kills structure, just a pullback. and I'm uncomfortable. I feel the pressure. I feel the anxiety, and now it's just you know, f Elon. Take my trade off, and then I look back a week later, and boom, right, breakout. Everything unfolded perfectly. Goes on, hits a target, and then you're looking back thinking, well, I bought it because I had a green arrow, and at no point after I bought it did it not have the green arrow. So therefore, what happened back there to shake me out of what remained my go-to trade? It's almost always going to be sizing. So again, you can cut your size in half. And I think over the course of, 50, 100 plus trades, you end up catching more. If you have 1% of your account in the Tesla trade up here, and they kick that beautiful setup back to the buy zone, it's not the end of the world. If you have 10, 15%, yeah, you don't want to hear anything about, oh, the structure is good and you got the pretty arrows. You're thinking, okay, this is getting pretty damn uncomfortable. But the market doesn't care. It's still a good-looking setup. Cut the size in half and double your stops. Yeah, Steve. So the fun thing about the next 90 days, for y'all taking the class and getting that beta version, and I'll say this every day for 90 days. Anything you can possibly think of for different criteria, timeframes, like pre-built filters, anything y'all can think of, throw it at me. They can pretty much do it all. So one thing I'm going to talk to them about is, again, which a few of you have mentioned is, all right, could we have a column where, for example, if the QQQ finished at a positive 50 yesterday and today you finish at a 10, can we now have a column that shows us a negative 40 change? QQQ pulled back a good 40 points on the scoring system today. Pretty sure we can throw that in, so that's one of my requests. And yeah, that'll be helpful in terms of maybe catching those turning points. Imagine Monday morning the QQQ's at 10. By Tuesday, the Qs are a 20. Wednesday, the Qs have a 50. Thursday, an 80. You kind of see that shift from a numbers point of view. Robert, expected move and implied volatility. Yeah, we're going to look into that as well. Again, anything y'all can think of, we'll take it. Different time frames, and then I mentioned we're going to bump it up to about 3,000 different stocks. So therefore, when we do that, and when you get the beta version, if you go to the main list, right, and you look for maybe Netflix, for example. Obviously, we have Netflix, but if you look for it in the database, you can't find it. Just send me a ticker, we'll add it. If you have a off the beaten path name you're watching. Helen, the Caldwell coming from Spot Gamma, probably something we couldn't provide. That'd be more of a partnership endeavor kind of thing. And then Steve, good question. What's worse, a smaller time frame changing or a larger time frame? Yeah, really good question. I would say from a bigger picture point of view, bigger time frames. Good way to look at it. What would it take here to quote unquote ruin Tesla's 2-day squeeze? Well, that'd be a pullback under, call it 315-ish. Okay, so to go and kill that trigger, from the short-term high, Tesla has to pull back a good 12, 13, 15%. So that being said, yeah, a change in the scores in your bigger time frame, oftentimes more meaningful. Reason being, it takes more to change a bigger time frame score. If they're going to come back here and take out the 2-day 50, to do that alone, they have to pull it back about 11%. Where if it's your Tesla 15-minute chart, that would only have to pull back about 2.5% off the highs to break structure, flip bearish, and get the sell trigger. So to your point, in the grand scheme of things, getting a 5-minute sell or a 5-minute buy doesn't take as much, not as hard as getting a weekly or a weekly, monthly, or a 3-day. So yeah, therefore, if you get a change on a bigger time frame, it took a lot more to get that change, therefore a lot more meaningful. And oftentimes, it takes a lot more to go and change a score back. Your weekly NVIDIA goes from 100 down to 90, down to 40, down to negative 30. That big time frame is not usually going to go from negative 30 back to 100 all that quick. Where if you're watching the 5-minute, 15-minute, it can do that in a few hours. Awesome question there. Y'all got the good questions. Yeah, Kevin, my pleasure, man. Hope you have a good weekend. Hope to see a bunch of you folks for tomorrow. Yeah, Brian, so Google for the 30-minute. I think there's only one thing that can make Google a little bit better for Monday. And what do I like about Google? You have the perfect 30-minute squeeze in terms of structure, trend, and momentum. The big three, 15 points, green arrow, green label, the fixins for the push. Right, that by itself, that one time frame, that can give you edge. You get more edge from the fact that you have a 15-minute buy trigger, an hourly, a 2, a 4, a daily, and a weekly. Okay, so great. Now I have this really bullish 30-minute squeeze. The time frame below it, the time frames above it, they're bullish as well. Good looking 30-minute squeeze, good multi-time frame alignment. There's your edge. Then we jump to our leaderboard. And off of the top 20 tonight, Google's here within 88% and 80 points out of a $1.20. There's more edge. Good alignment, good looking 30-minute squeeze. Ranks out nicely on the board. The only other thing or things would be QQQ and the XLC. QQQ, XLC, S&P's XLK. So think market behind it. Right now, communications they're in great shape, so that'll work. Good 30-minute squeeze, good alignment, good ranking, and a good communication group behind it. I think the final kicker would be the QQQ. If that can climb the rankings, get a couple lower time frame buy triggers, then I think around that one Google idea, you have a lot of edge. Where we could keep it as simple as, hey, here's a nice 30-minute squeeze. And forget the market, forget that bird's eye view, forget the sectors. I'm going to jump in, just buy the 30-minute squeeze. That I think can make for decent results, and then taking the market context, the sectors, leadership, that all can make for much better results. Now, Google proved here today it can make a good pop by itself. But yeah, anything shaping up here for bulls on in the indexes for Monday could be the shot there for Google. But all right, y'all, I am going to cut you loose here. I got to work on some class slides, couple of goodies for tomorrow. But yeah, thank you for all the time and effort this week. Appreciate y'all coming out for the webinar. And yeah, we are long Google, Amazon, and Tesla into September. The final push. Get through September, get through October, get through November. We'll be talking New Year's Eve, holidays, snowflakes, all the fun end of year stuff before we know it. But thank y'all again. Any questions, guys? I'll be in the office tonight. Hit me up here in the chat, shoot me an email, and then for those of you in the class for tomorrow, get a good night's sleep, take your dog for a few walks, and yeah, we'll believe 10 o'clock Central. So I'll see you at 10. We shall hit the ground running. It'll be a good time, and then unfortunately, we got to wait one extra day to get back to work next week. So By Tuesday, I'll be jonesing for the action. But thank you again, guys. Have a good weekend. Be safe. Stay warm. Talk